All right, let's talk about self-employment tax and exactly what that means and how it affects business entities and their owners and how it affects selection of the entity for your client. So self-employment tax really just refers to FICA. So if you've ever had a job and you ever received a paycheck, you notice the FICA deduction, which is the Federal Insurance Contributions Act. It funds Social Security and Medicare. This is in addition to income tax. So you pay FICA in addition to your income tax. It's an employment tax, so it only applies to employment. When I receive a dividend from P&G as part of my investment in their stock, it is not subject to FICA. Why? Because it is not employment. I am a shareholder of P&G, and so the distribution they make to me is not employment. It is not a salary. The FICA is paid by both the employees and the employers. The total is about 15.3% of the employee's salary. Now, it might change a little bit depending on how much you earn, and there are limits, caps, and certain other intricacies of it that we don't need to understand. Let's just assume that the self-employment tax, the FICA, is going to be 15.3% of the employee's salary, and in a traditional employment context, the employer, the company, will pay half, and the employee will pay half. Let's look at some FICA illustrations to better understand how this works. All right, so remember, FICA, it's about 15.3% of the employee's salary. The company/employer pays half of that, which is 7.65%, and the employee pays half of that, which is 7.65%. Let's compare the typical employment situation with a situation where someone is self-employed. How does FICA work in the regular employee context, and how does it work in the self-employment context? So our illustrations are an employee photographer, a photographer who's an employee of a photo studio, and the other one is a similar fact pattern, but here we have a self-employed photographer. So the employee salary is $50,000. Remember, the government expects 15.3% of that, which is $7,650. The employee's burden is $3,825, which is deducted from her salary. The studio, the employer's responsibility for that FICA amount is $3,825. So when we have an employee making $50,000, the government is going to get its $7,650 FICA tax, which is 15.3% of the $50,000. The employee is going to pay half of that, $3,825, and that will be deducted from her salary. The studio, the employer, will pay $3,825 of that to the government. In the situation where our photographer, where our photographer is self-employed, let's say her income is $50,000. Her FICA is 15.3%, which is the same $7,650 in the preceding example, but in this case, the photographer is going to have to pay the entire $7,650 in FICA tax to the government. All right, let's look at the self-employment tax issue that affects your selection of business organization. Let's think of it first in this way. FICA, the 15.3%, and we'll call it FICA or we'll call it the self-employment tax, applies only to salary in the employment context. So if I make income some other way, FICA tax does not apply. So for example, if I'm a landlord and I get rent of $1,000, I do not have to pay FICA tax on that. That is income, but it is not salary in the employment context. Similarly, if I'm a stockholder of Disney, and Disney issues me a dividend of $1,000, I do not have to pay FICA on that. It is not salary in the employment context. I will have tax on that, but it's not FICA tax. So if you're a business owner who works for the company and you receive income, taxable income from the company, you would like to say some of that is salary and some of it is not salary. Some of it is like that dividend that Disney issued to me. It is my return on my investment. It is not salary. And this is important because the employee salary, the income I receive from the company that we consider salary, that is subject to both FICA, 15.3%, and on top of that, income tax. If it's just a return on my investment akin to a dividend I receive from Disney, then I only pay income tax. I will not pay FICA on that. Right? The question is, will the IRS let me do this? When I am an active owner in a business entity, such as a corporation, an LLC, or a partnership, can I say to the IRS that this income I received from my business entity in which I am active, some of it is salary and some of it is return on my investment. The return on my investment portion of it is not subject to FICA. And in that way, I will save taxes. Right? The answer is that for sub-K entities, you cannot do this. And for sub-S entities, you can, but there are certain limits. Let's talk about subchapter K taxation and self-employment tax, how they work together. So remember, subchapter K is pass-through taxation, which means the entity does not pay tax on its profits. The profits are passed through to the owners for tax purposes, and the owners will pay income tax on the company's profits. This is the default taxation regime for both partnerships and LLCs. Let's look at a little hypothetical. We have some sort of subchapter K entity, and we have an owner, employee, a photographer. The photographer is both an owner of the entity and is an employee of the entity. She works as a photographer naturally. Let's say her income from the business is $50,000. If she were to pay 15.3% FICA, self-employment tax, on the entire $50,000, her FICA self-employment burden would be $7,650. On top of that, she would also have to pay income tax on the $50,000. What she would like to do is she would like to say that not the entire $50,000 is salary. She'd like to say that only $30,000, for example, is her salary from the business. The other $20,000 is a return on her investment in the company. In other words, she wants to look at $20,000 as if it were like a dividend from Disney. It is not employment income, it is investment income. For her investment income, she would not pay any FICA tax. So if the IRS accepts this, her FICA burden would be reduced from $7,650 to $4,590. Now, naturally, she'd also have to pay income tax on the $50,000, but her FICA burden would be reduced substantially. What does the IRS say to that? The IRS says, no, you can't do that. If you have a sub-K entity and you are active in the management of the business of that sub-K entity, any income you receive from that entity is employment income, which means the entire amount will be subject to FICA tax. And in this case, that means our photographer will have to pay the full $7,650 in FICA self-employment tax plus income tax. Let's see how the subchapter S entity is different. The subchapter S entity, if you remember correctly, is also a pass-through taxation regime. It is for corporations and LLCs, but only if they elect and they qualify. Remember, we had those 5 conditions that you had to meet to qualify as a subchapter S entity. So here, same situation we had with the subchapter K, but this time we have a subchapter S entity, and we have an owner-employee who works as a photographer for the entity. Her income is $50,000. We know that FICA on the entire $50,000 would cost her $7,650. What she'd like to do is say $30,000 is salary and $20,000 is return on her investment. The $30,000 would be subject to both FICA and income tax because it's a salary, and the $20,000 investment return would not be subject to FICA because it's not a salary. It would only be subject to income tax. If the IRS accepts this, then she would pay 15.3% on the $30,000 only, and her FICA burden would be $4,590, in contrast with a FICA burden of a possible $7,650. What does the IRS say to this? The IRS says yes. For a subchapter S entity, if you are active in the management of the business of the entity and you receive income from that entity, you can allocate between salary and investment return. The one big important proviso is that the salary cannot be unreasonably low. You have to allocate a reasonable portion to your salary. So we're looking at her salary in this case. She's allocated $30,000 to it. We'd have to determine whether $30,000 was a reasonable salary. Let's talk about how self-employment tax, FICA, works with income tax. Students will often ask, am I paying income tax on my income before I pay my FICA or after I pay my FICA? And the basic answer is that you are paying income tax on the entire income before you pay FICA. But there's a little proviso, so let's take a look at that. So let's compare 2 situations. Let's have a photo studio that has an employee, and let's have a self-employed photographer, and let's just look at how FICA works with income tax in these 2 situations. So remember, FICA is about 15.3% of the employee's salary. The company employer pays half of that, 7.65%, and the employee pays half of that, 7.65%. In the self-employment context, FICA is still 15.3% of the employee's salary. The self-employed person will pay the entire 15.3%. So here's our situation. We have an employer that's a photo studio, and we have an employee photographer. The employee salary is $50,000. The government expects 15.3% of that. The employee will pay 7.65% of that, which is $3,825. And the studio employer will pay the same, $3,825. So they share the FICA burden for the employee's $50,000 salary. So what will the employee pay for income tax? Well, we don't know the employee's tax bracket, but the employee will pay income tax on the full $50,000. So the employee in this situation does not get credit, does not get a deduction for the $3,825 that she paid to FICA. She needs to pay income tax on the entire $50,000. Well, what about the employer, the photo studio? Let's say the studio's revenue is $220,000 and it has certain operating expenses of $70,000 and it has the salary expense for the employee. It also has a FICA expense. The FICA amount that the studio pays on the employee's salary is also considered an expense. So in the end, the income tax, the income for the studio employer is $96,175, and the studio will pay income tax on that. So if we're looking at the overall tax of the employee and the employer, there is a FICA deduction, and the FICA deduction comes in the photo studio employer. They have a FICA expense, and so that FICA expense will reduce the studio employer's income and therefore will reduce the income tax burden of the studio employer. Let's go to the right side and let's look at how this works with a self-employed photographer. Same basic fact pattern. The photographer's income is $50,000. The photographer must pay the entire FICA burden, which is $7,650. That's 15.3% of $50,000. And the photographer will pay income tax on $46,175. And you might say, wait a minute, 50,000 minus 7,650 is not 46,175. And you'll also notice that 46,175 is not the full 50,000. So where do we get the number 46,175? Well, half of the FICA can be deducted as, we'll call it an expense. It's a deduction that reduces the self-employed photographer's overall income for tax purposes. So once we deduct half of the 15.3% FICA burden, $3,825, from the 50,000, we wind up with 46,175. And so the photographer will not pay tax on the entire 50,000. She will get to deduct some of the FICA from her income so that she can reduce her tax burden, but she does not get to she does not get to deduct the entire $7,650 from the 50,000. She can deduct half of it. And you see how that parallels what's happening on the left. What's happening on the left is that there's an overall FICA burden of $7,650. The government is getting taxes on the entire income less half of that FICA burden, less $3,825 as a deduction. So there's parallel concepts working on both sides.